on Business Incorporated today. South Africa unemployment rate hit 34.4% in second quarter of 2021. Egypt electricity set for a boost with loan deal. And Kenyan diaspora remittances hits a new high. Hello and welcome to the program. I'm Ini John Mekwa. Well, let's begin with the markets in Africa. Major indexes from the African continent were trading in the green at intraday. Nigeria's NGX rose 0.04% to 39,450.15 points. While South Africa's main index climbed higher. It was up 1.11%. Elsewhere, Egypt's EGX index edged slightly higher by 0.19%. Also, Kenya closed Monday session positive. Over in the Middle East, trading was mostly positive also as intraday. Abu Dhabi's index fell marginally by 0.03%, while Dubai's benchmark index rose by more than 0.5%. Elsewhere in the region, Saudi Arabia and Qatar indexes edged higher by 0.49% and 0.29% respectively, and this was at intraday. We head to Europe now, where stocks edged fractionally higher as investors took heart from the U.S. Food and Drug Administration's full approval of the Pfizer-BioNTech vaccine and calming worries about imminent tapering from the Federal Reserve, where we have Chelsea joining us from Frankfurt now to tell us more from that region. Hello, Chelsea. Good afternoon. Good to have you once again.
Thank you for having me.
So stocks were on the rise in Europe this morning, with travel stocks in particular making gains. What's driving this?
Yeah, so the travel sector has certainly taken off today. Lufthansa, the German airline in particular, up almost 4% today. But in general, airlines, hospitality companies, anything travel related is doing really well today, in part because, especially here in Europe, the summer travel season is actually turning out pretty well. We saw new data recently that showed European airports are flying about 70% of the flights they were flying in 2019, so before the pandemic, so not fully recovered, but clearly there has been an increase in demand over the summer period. Lufthansa says today that they're going to add about 150 new destinations to their flight roster starting next month. So that's also helping to boost spirits among investors. Otherwise, it's a little bit more of a mixed picture. The DAX here in Frankfurt is up about 0.2%. Other indexes in Europe are actually down for the day. So there's still a lot of concern about the Delta variant, the potential for new restrictions. But for now, there is a lot of hope that the economy is holding up quite well.
Data shows that the economy in Germany grew slightly more than expected for the second quarter of the year. What's behind this?
I think this data point as well is helping make Germany an exception on the financial markets. Today, the German economy, according to the Statistics Office, actually grew 1.6% instead of the 1.5% that they had previously forecast. That is a very small upgrade, but it's a noticeable one nonetheless. The big driver of this was consumer spending. So in the quarter, consumers spent more than 3% more in the quarter than they had in the previous quarter. That's a lot to do with the fact that many businesses were allowed to reopen in the beginning of summer. So restaurants, hospitality, retail, all of those begin to see an influx of new customers as people who had been really building up savings throughout the lockdowns began to spend again. As well, boosting growth in this quarter was public spending, and that so all of that has really a pretty strong showing in the second quarter for Germany.
Meanwhile, the country is still feeling the impact of COVID-19 as we see that stimulus spending has driven the German government deficit to its highest in 26 years. How worrying is that?
Well, it's certainly the downside of this economic data we had today. The German government has put a lot of money on the table to support people who have lost their jobs, people who were put on short-time work schemes, as well as businesses who lost revenue. And that was very expensive. So in the first half of this year, we saw data today that showed basically an 80 billion euro deficit for the German government. That is one of the highest levels we've ever seen in post-reunification Germany. Economists are really divided on how big of an issue this is going to be. Germany has the benefit of having negative interest rates, so it basically gets paid to borrow money, and so it doesn't have to worry right now about not being able to pay back this rising debt burden. But in the long term, economists warn this could become a bigger strain on the economy, and of course the pandemic is far from over, so we could also see Germany's debt burden continue to rise if we see new restrictions go into place and the government once again have to step up spending to support businesses and people who have been impacted.
Wow. All right. We just hope it won't get to that. But thank you so much, Chelsea, and enjoy the rest of your day. So let's move to London now. We have Juliana joining us from our London studios. Hello, Juliana. Good to speak to you again. Good afternoon. So CBS's latest distributive trade survey shows that retailers and distributors' stock levels hit the lowest level on record this month. Why do we have this decline? What drove it? Hello, Juliana. Oh, I think we have a bit of technical hitch there. Juliana cannot seem to hear us. Well, we'll try to reestablish contact with Juliana in a short while. For now, let's move over to Asia, where shares rose in early trade, with Hong Kong stocks leading gains among the region's major markets. That came after the tech-heavy Nasdaq Composite jumped to a record closing high overnight following the U.S. Food and Drug Administration full approval of Pfizer and BioNTech's COVID-19 vaccine. Hong Kong's Hang Seng Index closed 2.46% higher at 25,727.92, with shares of Chinese tech firms listed in the city jumping. Mainland Chinese stocks closed higher as the Shanghai Composite rose 1.07% to 3,514.47, while the Shenzhen Component advanced 0.87% to 14,663.55. The Nikkei 225 in Japan gained 0.87% to close at 27,732.10. As shares of conglomerate SoftBank Group surged about 2%. The Topix Index advanced 1% to finish the trading day at 1,934.20. South Korea's Kospi jumped 1.56% to close at 3,138.30. In Australia, the S&P AX 200 edged 0.17% higher on the day, and MCSI's Broadex Index of Asia-Pacific shares outside Japan also gained. It gained 1.82%. Okay, so I think we have Juliana now. Hello, Juliana.
Hello, can you hear me from London?
Yes, we can hear you from London, Juliana.
Brilliant.
Yeah, so the CBI's latest distributive trade survey shows that retailers and distributors' stock levels hit the lowest level on record this month. What happened?
Yeah, well, operational challenges, a major problem for UK retailers. There's a big story that's been breaking news in the UK today. I don't know if you've heard about that, Innie, but it's about McDonald's. McDonald's has run out of milkshakes, and not just milkshakes, it's also run out of bottled drinks. So really disappointing as the weather starts to pick up in the country and we're on summer holidays. Parents have been unable to let their children enjoy their Happy Meal with their milkshakes. this. It sounds funny, but it's not, because it is a serious issue. And this is one of the reasons why the British Retail Consortium and Logistics UK have written to Britain's Business Secretary Kwasi Kwarteng, warning them about these 90,000 truck driver shortages, which is obviously having a knock-on effect in providing products and produce to retail stores and also restaurants. Last week it was Nando's and KFC that had the issue, and today it is McDonald's. Also as well, pandemic, Brexit and COVID is a major problem for the CBI distributive survey, which you were asking about. We know that retail accounts for the biggest amount of young workers in the UK. A lot of young people, in fact, millions of young people in the UK still not vaccinated. And if you're not vaccinated and you receive an alert from the NHS COVID app, you have to self-isolate, and many of them can't come to work because of that. And that's also part of this big reason here.
Yeah, well, pandemic, COVID, and Brexit, what a heavy combination, obviously having adverse effects now. But there's more data from the tax office that there were 82,110 residential transactions in July. That's a fall of 61.5%. Does this have to do with the stamp duty?
All to do with the stamp duty in a massive scheme which was announced by Chancellor Rishi Sunak last year to basically kickstart the property market and get people on the housing ladder. It was so successful. That's one of the reasons why we've been reporting on this show month on month. Yes. House prices are rising, but it's come to an end, or the massive tax break has come to an end. So if you were in Northern Ireland and England and you want to buy property up to £500,000, you didn't have to pay any stamp duty. That's ended, and now I believe it's up to £250,000 until the end of September. So this fall in the amount of residential property transactions was always going to be expected, but it's pretty stark, a 61.5% fall. I believe about 250,000 properties were sold in June. That's gone down to about 80,000 properties. No alarm bells yet, but economists in particular, are going to be looking to see just how this is going to affect the prices of houses over the next couple of months, and whether the house price boom is going to be coming to an end.
And how is all of this being digested by investors in the markets?
Yeah, not a great start for the FTSE. It started off pretty slowly this morning. At intraday, it's in the red. A lot of investors picking up on that property data. The FTSE All Share is down 0.01%. FTSE 100 also down by 0.17%. And the FTSE 250, the domestic market, slightly up by 0.53%. In currencies, the British pound is up on the US dollar by 0.04%, also up on the euro by 0.13%. And up on the Japanese yen at intraday by 0.07%, Innie.
Thank you so much, Juliana. Enjoy the rest of your day.
Thank you.
So let's move to the U.S. now, where stock futures edge higher in early trading following a broad-based rally and news that the United States regulators granted full approval for Pfizer-BioNTech COVID-19 vaccine. Futures on the Dow Jones Industrial Average rose 54 points. S&P 500 futures and Nasdaq 100 futures traded in the positive territory. The S&P 500 closed yesterday's session 0.8% higher after touching an intraday record high. The tech-heavy Nasdaq Composite rose about 1.5% to hit a record closing high. The Dow Jones Industrial Average gained more than 200 points yesterday. Investors are eyeing the Jackson Hole Symposium later on this week, which is expected to be a market-moving event, where central bankers could detail their plans for tapering monetary stimulus. The Federal Reserve has started discussions to pull back its $120 billion a month bond buying program by the end of this year. In the oil market, prices rose today after the U.S. drug regulator granted full approval to Pfizer-BioNTech COVID-19 vaccine, stoking investors' hope that higher fuel demand will follow a potential step in the U.S. coronavirus vaccination rate. Brent crude oil futures gained 66 cents to $69.41 a barrel, while U.S. West Texas Intermediate crude futures increased by 60 cents to $66.24 a barrel. Both benchmarks jumped more than 5% yesterday, helped by a weaker U.S. dollar after marking their biggest week of losses in more than 9 months last week. The U.S. Food and Drug Administration, which last December authorized the Pfizer-BioNTech 2-dose vaccine for emergency use, has now issued full approval for use in the people aged 16 and older. Health officials hope that the action will convince unvaccinated Americans that the shot is safe and effective, and expect it could also prompt more state and local governments as well as private employers to impose vaccine mandate. Also boosting prices, U.S. crude and gasoline inventories likely declined last week, while distillate stockpiles are expected to have increased. Let's take a break now. When we come back, we'll continue with more stories, especially from the African continent. It's Business Incorporated on Channels Television. You're welcome back to the program. Now let's go to Ivory Coast. It's the world's biggest cocoa exporter, and it has overtaken India to become that position. It's exporter of cashew nuts. The country has a forecast of increasing production by 100,000 tons this year only. Nigeria is the leading exporter of premium quality raw cashew nuts with an average 48 kernel yield outturn. Based with 19 producing states, makes Nigeria the 4th largest producer of cashew nuts worldwide. But Nigeria is exporting raw cashew nuts. So what lessons can Nigeria learn from Ivory Coast? We have Shea Mediora, analyst with financial derivatives, talking to us on that. Hello, Shea. Good afternoon. Good to have you on the show. All right, Shea, I hope you can hear me. From being a subsistent producer of cashew nuts to overtaking India to become the world's largest, cashew nuts are one of Ivory Coast's highest export commodities, contributing about $68.45 million to total exports, and that was in 2019. How did Ivory Coast achieve this, and what lessons can Nigeria learn from that? All right, Shea, I think you might have to unmute because we can see you're talking, but we cannot hear you. Okay, I guess while we try to deal with that, let's move on to South Africa now. Statistics South Africa has released the quarterly labor force survey for Q2 2021, and the country's unemployment rate has risen to 34.4% compared to the previous high of 32.6% for the first quarter. The Statistician General says that the number of unemployed persons increased by 584,000 to 7 million, though some industries, including construction, trade, agriculture, and transport, created some jobs. The net decline of job losses stands at 54,000 in total employment. Let's listen to him.
The number of those that were employed in the first quarter of 2021 has declined to the second quarter of 2021 by 54,000 people. And the number of the unemployed increased by 584,000 people, from 7.2 million people to 7.8 million people. And the number of those that are the discouraged work seekers has increased from 3.1 million to 3.3 million. It has increased by 186,000 people. But we see that there are a lot of people who have moved out of the other not economically active to start actively looking for employment. And we can see that we have about 571,000 people who have moved out of the other not economically active category to go and look for employment. And why we call them other not economically active is because that category, as well as the discouraged work seekers, are the not economically active people.
All right, so I think we have Shea now. Hello, Shea, can you hear me?
Yes, I can hear you. I can hear you perfectly.
All right, great. So we're talking about cashew nuts and, of course, lessons to be learned from Ivory Coast. And we see that from being a subsistence producer of cashew nuts, they have now overtaken India as the world's largest. Cashew nuts are one of the country's largest contributor. They contributed $68.45 million in 2029. How did they achieve this, and what can Nigeria learn from it?
So the first thing we need to take into consideration is the fact that Ivory Coast's position today was or is a result of years and years of planning and reforms. The reforms started way back in the early 2000s when there was some internal conflict and the civil war, and then they thought to further diversify their agricultural revenue and then divest from things like cash crops and go into crops like cashew nuts. Now, a lot of Ivory Coast farming was taking place at the time in the southern part of the country. And then they further looked to the northern part and thought that, okay, they should explore crops that are a lot more favorable to grow in the savannah region. And that was when they began reforming their cashew nut space. And this was driven primarily by two things. The first one being availability of land, seeing as population density in those areas, in the northern areas, weren't quite the same or was quite lower than in the southern region. The second one also being how easy it was to integrate this cashew production into the savanna systems already in place. And subsequently, this along with the increase in global demand for cashew kernels, and this subsequently led to them reforming their cashew nut space, and subsequently this has led to an increase. Then further in 2013, the CCA in Ivory Coast also implemented procedures where they set a price floor for cashew prices. And this subsequently also incentivized farmers to also to further improve on their practices. And this has subsequently led farmers to also further boost production of cashew. And seeing as there are a lot of similarities with Ivory Coast in terms of the regions where cashew is produced, I think these are some lessons we can take from them.
Okay, so seeing that in Nigeria, some of the areas where cashew nut is produced is Kaduna, Kogi, Niger State. How much disruption has insecurity brought to the production?
Yes, for a fact, we can say that insecurity is a big problem, and not just for cashew production, but agricultural products as a whole. Because we see for a fact that a lot of the production or a lot of our output in Nigeria is significantly above average when compared to a lot of other places. And this is even with a lot of constraints like security problems, as well as the kinds of methods that are being employed to produce our crops here in Nigeria. Then we can say for a fact that with improved capital inflows into this particular sector, that of course we are going to see further growth in cashew production. But first, the security problems have to be solved before we can even see further production in the first place. So yes, that's a lot of problems have been caused by these security problems in these regions.
All right, Shay, we have to stop there. Thank you so much for sharing your thoughts with us on some lessons that Nigeria can learn from Ivory Coast when it comes to cashew production. So moving on now, we go to Egypt, where state-run Egyptian electricity transmission company has signed a syndicated loan agreement worth about 4 billion Egyptian pounds with a consortium of 4 banks. The consortium is led by the National Bank of Egypt as a senior mandated lead arranger, facility agent, and book runner. The Commissioner International Bank and Bok de Care are in the consortium as lead. The loan will partially finance the investment cost of some EETC's projects, including building new substations, upgrading existing stations, and installation of new cables and high-voltage transmission lines nationwide. And just before we go, Kenyans in diaspora sent home $336.7 million in July, setting a new monthly record on remittances since the Central Bank of Kenya started capturing the data. This offsets the record that had been set in May when the inflows hit $315.8 million before slowing to $305.9 million in June. Last month's remittances are a 21.6% increase compared to $277 million recorded in July 2020. The United States continues to be the largest source of remittances into Kenya, accounting for 58.3% of remittances in July 2021. Other significant source markets include the UK, Germany, and Canada. Well, that's it on the program today. Thank you so much for watching. I'm Imi John Mekwa.